For the very generous introduction. Thank you to all of you who have defied this cold New York morning to be with us. And of course, thank you, Dimitris and Konstantinos, for attending this panel. The topic of the panel is deals that define the year, M&A and capital markets deals transforming Greece. So I think all of our audience is expecting that we're going to talk about some of the transformative big transactions of the year that I think collectively we have curated and selected for reasons of perhaps being able to draw some didactic conclusions from these deals, what they mean and how perhaps they are indicative of broader trends. And this is what we will try to do together with your help. I don't think that either Goldman Sachs or Morgan Stanley need any introduction. I think it suffices to say that between the two of you, you have done most, if not substantially, all of the major deals in the country in some form or another. Obviously, other major banks have played a role, but you have certainly led a number of these transactions, either jointly or solely, and you are extremely well placed to have this conversation. Not only because I should add of the 2025 deal flow, but precisely because both of you with enormous experience with your organizations have seen the last few years, the crisis, the years after the crisis, perhaps the inflection point of the Greek economy and Greek financial markets, and you have a point of reference where we were, how we started, and what 2025 has brought. I think from my perspective, before I open the floor to you, I would say that obviously we all know the old adage of financial investing. It's very simple, really. The implementation is difficult. The theory is very simple. Financial capital always flows where it's welcome, where the rules are predictable, the policy and broader framework is stable, which then allows investors and managers to plan their business plans and manage risk. So you're looking at a rules-based macroeconomic, political, financial, and monetary stability as a bedrock of deal making, fundamentally. So with nothing further from me, Dimitris, we'll start with you. I know that you have selected a couple of very interesting transactions. The floor is yours. Why these deals are important, what are they, why they are important, what do they signal for the investment proposition of the Greek economy?
Apostolos, thank you. Thank you everyone for Nicola and Olga for the invitation. Konstantinos, good to see you again. Same panel this year. So look, it was a very busy year, I think, for our bank and also for Morgan Stanley. And it was a good year for Greece. We saw a lot of deals, especially, on the debt side, there was around 17 billion of issuance, banks and corporates, a record year. Equity, I would say the opposite. After the big capitalization transactions, banks, corporates, we didn't see a lot of equity issuance, but it was a question of supply, not demand. There is a lot of demand for Greek equities, but we haven't seen yet a lot of companies coming to market for 25. And M&A, I think, it was a very good year. It's going to be a very good year also for next year, in line with the global trends. I think, there were a number of deals. I don't want to, not mentioned a number of those, but I'll highlight maybe 3 deals, and I'll be brief. One is the Intralot acquisition of Gkoutzinis. Intralot is a lottery tech business, active in 30 countries. And Gkoutzinis is a 100% UK online gaming business. So Intralot has an EV of 1 billion before the transaction, and Gkoutzinis has an EV of 3 billion. So how can a company of 1 billion EV buy a company of 3 billion? And when the rating of the 1 billion company is single B. that's a bit tricky, right? And especially, coming from Greece, there was a bit of history of Apostolos in the crisis. So anyway, the deal happened. It was announced July, closed in October. Obviously, there was a bridge finance provided by Goldman and other banks, 1.6 billion. We had to raise equity for 150 million. And the deal was extremely complex. You had the public tender at the stock exchange. You had to raise debt financing, equity financing, and also do a cross-border M&A deal. And we can talk through, I guess, later about the lessons, challenges, what it means for, for other companies. That was like a major deal. I think we feel very proud at GS and congratulations to both Interlock and Games to basically, and the other banks and lawyers to driving this deal. I think the second deal is also an interesting one, where Coca-Cola Hellenic, what was Coca-Cola and also provided a bridge of $2.5 billion, acquired Coca-Cola Beverage Africa, $5 billion deal. So Greek-based company, Greek-owned company buys company in Africa, 5 billion EV. Rationale to expand in 13 more countries. Coca-Cola is active in 30 countries, plus 13 in Africa, got 43. And, why? Because they're looking for higher growth. The rationale of the deal basically is higher growth in emerging markets. Coca-Cola has experience. They manage Nigeria and Egypt, so basically, track record in the region and basically higher growth. And the last deal was the Titan America IPO. That was done in January 2025. Obviously, US company with facilities across the country in cement, owned by a Greek family, right? And the rationale of the deal was to capture the arbitrage between valuation of European and US multiples, given the margins in cement are double versus the European margins. So double margins in the US versus Europe, double the multiples in the US versus Europe. So basically, getting access to US capital through that IPO was another major deal. Let me pause there and then
Yes, let me very briefly, before Konstantinos gets the floor. So in summary, we have a major acquisition of a foreign, larger competitor by a Greek company that was supported by foreign banks, foreign capital markets, equity and debt, Greek banks, Greek retail investors. So every conceivable form of financing has supported this deal. Second deal, Coca-Cola Hellenic acquiring a major international business, again supported by financial institutions bridging the financing. And then number three, we have a Greek-owned company successfully operating in the United States, doing an IPO in the United States. Konstantinos.
Sure, and Apostolos, thank you very much for doing the panel once again with us this year. Likewise, I wanted to return the compliment. You've been instrumental to the efforts of all the investment banks over the past few years in Greece, being a very trusted partner for us throughout product. So it's a real pleasure to be together. And Dimitris, of course, same for you. Thank God this year we have both microphones working, because last year you claimed it was maybe too heated between you and me. But great to be here after a very good year for the Greek markets, for M&A, and I think a year that we could say was big in terms of volumes, but also in terms of importance and franchise value for both our clients and the country itself. So you mentioned, of course, Interlock Bally's, extremely important transaction. I think it links well with the deal that Morgan Stanley did this year, was the merger between Allwyn and OPAP. I think the read across between the two is obviously the sector is gaming. It feels that Greece is becoming a bit of a gaming center, especially for our size. I think the sector is becoming an important one, but also the fact that both Interlock Bally's and Allwyn OPAP, two of the largest now combined groups in the gaming sector, are actually chosen to be listed in Greece, right? And I think that's one lesson that, as Apostolos mentioned, we might dive in a little bit more into it later, but I think one thing we should keep is two big companies merging, keeping the listing in Greece, something that I think it would be probably unheard of 5 or 6 years ago. Similar to Titan and the US IPO you mentioned, I think equally I would mention probably the Medlin relisting in London. Again, if you think about it, a large Greek champion moving into the UK, doing the primary listing there, keeping, of course, a secondary one in Greece, but being part of the FTSE 100, massive vote of confidence to the company, to the country. a Greek company becoming a champion now also in the UK markets. And then, of course, lastly, the one I wanted to mention, again, maybe the smaller in size, but I think potentially a very large one in terms of value for the Greek brand, was the Euronext acquisition of the Athens Stock Exchange. We've heard a lot about European capital markets being integrated. Well, I think that's a proof that at least the Greek capital markets are now becoming part of the largest European network. Investor access, liquidity, technology sharing. I think it's safe to say that we're changing gear on that front as well. So, look, 6 deals we mentioned between you and me all together, 2 in gaming, 2 ECM-related, Titan IPOing in the USA, Metlen choosing the similar path in London, Euronext and Athens, Coca-Cola expanding in Africa. But then again, just to finish, Apostole, by saying there are other as well, right? You saw smaller scale M&A, obviously with Erikos Dinan venturing into buying some more clinics. You see UniCredit being around Alpha Bank. You see our banks actually expanding again into activities that used to be non-core up until 5 or 6 years ago and now becoming core again, right? Like Eurolife with Eurobank and, of course, Piraeus Bank with the
CVC also doing a successful exit on their first investment in Hellenic Healthcare, partial exit in Hellenic.
Absolutely, with an investor that we haven't seen in Greece before. So just to finish on that note.
Terna Energy is another one.
Which closed this year, but obviously was announced the year before. But very large volumes, large numbers, big franchise value for the country and the corporates. And as Dimitris said, I think a trend that will go on for next year as well.
I think I suppose the simple question one could ask is this just simply a lot more deals, same as in the past, except a lot more deals, or are we seeing trends in these transactions in terms of who is underwriting them, who is supporting them on the equity and the debt, what is the reception in international financing markets? Do we see any qualitative differences, perhaps as lessons to learn in terms of the ability of the broader, let's say, Hellenic ecosystem to attract international investment? I know that you both have some thoughts on what it means and the lessons to draw.
Yeah, look, I think on debt and capital markets, I think Greece is a much more mature market, right? So, our banks are sovereign and investment grade. Just to remind you, 2017, almost like 8 years ago, the sovereign accessed the market for the first time after 3 years of absence, 2014, 17, and we're single B. Greece was single B in 17, right? So now we are investment grade. The markets are very mature. Greek banks, senior spreads are very close to Italian and Spanish. The Greek sovereign trades inside France and Italy. So I think debt capital markets, we feel very confident, right? And this translates to our appetite, Goldman, Morgan Stanley, other banks, friends from UBS, I see, and other banks, to underwrite deals, right? So if the country is single B and the company is single, is maybe triple C, how can I underwrite $2.5 billion deal?
Yeah, you have no confidence that you'll be able to syndicate successfully. What is the price at which you'll be able to sell? Exactly.
Yes, and on the equity side, so we saw a big wave of recapitalization of transactions, re-IPOs, the banks, PPC in 21. We saw Synergy, Hellenic Petroleum. So these transactions have created more confidence in the equity investors like US, UK, other countries, to be in more deals, right? So also equity, we are more mature. As I think the other exchange getting the M status is also very important. So I think there's no anymore like, I would say, a default in Greek risk. I think this is the opposite. I think now when we say Greek equity, Greek debt, we're an advantage compared to Germany, France, maybe UK.
And do you see the types of investors? Are these the same people recycling their money? Do you see new people like being interested? How does this shape up?
Look, it's a good question, right? And I think, speaking the truth, of course, we see a lot of the same names repeatedly being in Greece, names that have known the country for a decade now, made money out of it. For years, we've been saying that we see sort of like, new people coming in and getting convinced. I think this was the first time that we actually saw it, right? And that's not to say that the guys that were there before are not there anymore. but new names, both in terms of longer-term investors, private equity, private credit, but also public market investors, are now there. And I guess probably that's a good link to what Dimitris was saying, which in essence is that, look, Greece finally is behaving as a developed market, as a market that people trust, and the market that people want to be in. They want to invest resources, time, they want to be exposed to, and there's no real discount or drawback out of being branded as Greek company, Greek deal. Greece is there, same equal terms as any other country in Europe, right? And I think that's the message behind it.
And one of the points that I think you both emphasized when we last spoke on this issue was the voluminous participation of Greek investors, be it institutional or retail. I do remember, maybe 15 years ago, we used to do very successful debt issuances, but by incredibly well-known brands in the Greek market. I remember deals for Hellenic Petroleum and Motor Oil, like once upon a time, but local demand, institutional or retail, wouldn't go to, let's say, high-yield names or more difficult deals like Intralot. But we have seen that changing. Is that interesting? Is that good?
Very.
Yeah, look, I think on the equity side, there is a lot of liquidity in the system. So there's Greek family offices, corporates, retail, that we saw the last few years much more active in equity transactions, right? So, and I think with the help of the Greek banks, Greek brokers, to utilize these flows of capital, we see them a lot, right? I think which is a great addition. When you market a transaction starting with a 20%, 30% anchor by domestics, it makes a huge difference, right? When you go to long-only hedge funds to market a transaction versus have zero. In other markets, Italy, Spain, even Turkey have this already. So we didn't have it. I think now, in this combination of macro, more liquidity, more confidence, we have this. But I think what's also more important is we sense the change of confidence in the management teams. So it's the first time we saw, companies acquire, Intralot bought a company in the UK, Coca-Cola in Africa, Mytilineos going to the UK. We always said, like in 2, 3, 4 years, we need private equity to come to Greece. I think now we're doing the opposite. We want Greek companies to go abroad. Capital is available. We have expertise. We have great management teams. And equity markets are there. The markets are here in support the acquisition of other assets in the UK, US, or Europe, right?
Yeah. Look, and Apostolos, I think, and fully agree with Dimitris, I think the one point that I should make there is that up until maybe 3 or 4 or 5 years ago, we would have a situation in which deals were getting done because Greek investors were there to support them. And if you think about it, it was essentially the Greek local ecosystem subsidizing the success of the deals, right? And that's not the case anymore. Now these corporates go out, issue debt equity on international markets with international terms, and the fact that we have a Greek ecosystem that is strong, it's of course only supportive, but the difference between the and the views of the international and the Greek investors have fully converged, right? So we see the Greek investors participating as equal market participants rather than actually being there to subsidize the deals, and I think that's a big difference. And then second thing, which I guess it's one of the things that also Dimitris mentioned, is that Greek investors are not afraid now to take risks much broader than the names that they consider as household names, the names that they are used to. So you mentioned Intralot, of course, but then I would also mention Energean. Energean was a corporate that this year, having a Greek DNA, but practically being listed in the UK, majority of the revenues come out of Israel. They did their first Eurobond because it was a US dollar issuer up until now. Again, we saw the Greek local ecosystem being there, ready to support in a name that they were not as well informed as others, yet the local demand was actually out of any expectation. So that's another example of Greek investors now venturing out, taking proper risks, being and getting comfortable with name.
That's very true. That's very true. And I think it's a positive development. In the end of the day, the diversity of funding sources or equity sources is always a good thing. Competition for capital across a diverse range of providers is only good, I think, for the development of the financial system and for broader economic growth. There is, however, as the three of us discussed, a prerequisite, which is size and scale.
Correct.
And one can see the common thread underlying all of these transactions that very, very significant in size, which of course become a lot more interesting for everybody and allow people to look at them, in the global competition for capital. But most Greek companies aren't, of that size. So is that a challenge in terms of the next phase of development of the Greek financial system and the ability to see similar deals? Are we constrained by the fact that the Greek economy is mostly SMEs and smaller companies? Do you see a benefit in further consolidation, and how do you see that affecting the issues we are raising?
Yeah, look, I think it's very difficult to change the core of the Greek economy in like 3 or 4 years, right? We have SMEs, and everyone said, okay, we should get bigger companies to go abroad. It's not easy, right? I mean, to get two SMEs agree on terms and become a bigger SME. I mean, we would love to see more companies listed in Athens. I mean, we haven't seen, the last IPO was Athens Airports, right? We haven't seen major IPOs in Athens, right? I mean, we've seen
Qualco did an IPO this year.
You're right. So we've seen the re-IPOs, but we haven't seen actual, there are a few small listings, which is actually very positive, like Trade Estates and a few other Greek companies. So I would say we have 30, 40 big companies. It's a challenge. I agree with you. We don't have the scaling, that Italy, Spain has. And I think the other point is, even our big companies, like the banks, utilities, our airports, are big for the country, but I think they are still small in Europe. To give an example, right? So the biggest Greek bank has a market cap of 12, 13 billion, right? The biggest Italian bank has a market cap of 110 billion. The biggest utility has a market cap of 7 billion. I see Metlen and PPC, 7.5 billion, 8 billion. The biggest Italian utility has a market cap of 70 billion. So I think my point was earlier, we have the capital, we have the confidence, to increase growth, at least for the big companies. For the small ones, it's a challenge, right? I mean...
It is. And thank God we have the local ecosystem actually to support these companies as well. But look, Apostolos, for me, I think consolidation is the name of the game right now. We went through a phase 10, 15 years ago of sort of like saving the Greek corporates and the Greek banks, all the way to working with them to give them access to the international capital markets. That was a step 2. And then step 3 should be size, right? It should be creating these local Greek champions with the right size and attention that can actually bring forward the growth agenda of the government. And I think that was something that also the Minister of Finance has repeatedly said over the past few months, that actually creating local corporates that compete globally in a complicated world, I think this should be a priority for the next few years. And you mentioned, for example, the largest Italian bank or the largest Spanish bank. We don't need to go that far. Hungary has a 25 billion market cap bank, right, OTP, and it's a country potentially smaller than us. So for me, as I said, and as I started my response, I think consolidation is the name of the game. Let's go out there, create local champions, make them truly international, and actually have them competing with the international peers.
I don't think it will be a deal-making panel with a question on the outlook for 2026. Without breaking any confidences, obviously, how do you see a continuation of this trend?
Yeah, look, I think the activity will be as robust as 2025, especially in M&A. We see a lot of private equity strategics looking for Greek assets, and also Greek companies looking to expand abroad. I think we're going to see, because people are more confident, interest rates are low, inflation is low, macro is good, global markets are risk on. Why not expand? Why not now? So I think M&A will continue to be a driver. On equity, I don't, we had the big deals in the past. I think we're going to see smaller deals. I don't see any big, like 2 billion, 3 billion, right, 1.5 billion IPO or re-IPO on equity. But again, it's a question of supply, not demand. If you bring me a deal of 2 billion, we underwrite it tomorrow morning. Right? So it's a question of supply, right? And on that, I think we'll be in a busy year, right?
Yeah. I think it's going to be a good one, Apostolos. I'll agree with Dimitris. I think the momentum is there. The signs are there. I think 2026 should be strong. Let's hope it's not just strong, but also the importance behind these deals that are going to happen is going to be equally valuable towards the efforts of everyone. But my gut feeling is that we'll start the year good and should continue for the remaining of 2026.
I think it's a unique timing to play offense, to expand, to see targets, capital is available, the government is supportive, as Minister Hatzidakis. I think it's a time to go. It's time to go bigger and broader.
I mean, certainly the debt markets have rarely been stronger. I think the debt markets are finishing the year with incredible capacity to price tight, which of course is the fuel of M&A. So I think that certainly from our perspective, we see a great platform for financing deals that make sense.
Well, we've had what, like four or five high yield over the last 2 months, starting with PPC, Energy, and People Shared Metal, and I'm probably forgetting someone, but reminds you a little bit of the craziness of 2012, right? Remember when the Greek companies suddenly gained access again to international capital markets, suddenly you had like a deal every 2-3 weeks. Certainly the post-summer environment feels like that. And you make a good point, Apostole, to the extent that this continues in 2026 and people can actually finance their ambitions. As both Dimitris and I said, I think it's going to be a very strong year again.
Thank you very much. I think we'll leave it at that. I hope we didn't talk our book too much, but we draw some broader conclusions that are useful from a systemic standpoint. So thank you. Thank you both very much.
Thank you guys. Thanks a lot.